co-executive leadership model I really think it's something that we came up with a few years back when we started the firm, really as an evolution of what our experience has been together. Co-executive, it could be colloquial, but it's just how we naturally advance into a client relationship. So deeply invested, working day to day, executing on management strategies, and then really being a part of those long-term strategies. To me, that's kind of the root of it. Would you agree?
Yeah, I think there's more of a entrepreneurial spirit and element to it, right? That when you kind of start something on your own, you're doing everything. And I think the next layer of advancing the situation is having other people who can do a great number of things that allow you as the original founder to do the things that you're best at and where your priority and your focus is. Mm-hmm. And then over time, you're bringing in, I think, more specialization, right? So right. I think about a situation where, we've served as that second layer, served as CFO or COO, and over a 2 or 3 year period, then start to have a HR consultant that comes in and starts to take right. some of the day-to-day human resources elements off of the table, right? And so I think for me, that ability to be very entrepreneurial and kind of focused on getting those great number of things done and starting them and finishing them, mm-hmm. I think is a big part of the model.
I agree. And both of us coming from multiple public companies that ultimately started very small but became bigger. And when we engage with clients that are starting out, at a very kind of rudimentary level, that co-executive leadership, which we'll talk about in a little bit, is really critical. Is to have someone that's leading through those steps, and setting that cadence. And you touched on the entrepreneurial nature of it. That it's exciting. There's a vision, but there really does need to be an ordering of, I need to do this, and I can't get distracted with this at the same time. That will come down the road. And knowing that, as you said, that kind of ordering of steps to ultimately get to that vision, but not having that early on is really, is difficult.
Yeah, I think that's the counterbalance for entrepreneurs and founders and, mm-hmm. and CEOs, right, is getting pulled into so many different aspects of running the company that you're not doing the things that are important to the company, right? And so from my perspective, I think trying to make sure that there's an execution element that's driving those things home, mm-hmm. Again, start to finish, is, helps, I think most critically helps the people responsible for the vision of the company stay there, mm-hmm. and not get bogged down in making sure, again, payroll is going out on time.
Yeah, I agree with that.
I think the counterbalance to what a lot of, and I'll use kind of fractional CFO or consultants as two examples, I think the counterbalance is that ability to be at a strategic level and if not at a founder level, kind of half a turn away. So that same shared spirit in the overall goal and mission of the organization, that same commitment to driving long-term value, but maybe not on a, not just driving kind of the individual subject matter area, right? I think, yeah. And that's where as I started at the top, right, with entrepreneurs being broader and having to do so many different things, right? You bring in a fractional CFO, and that's kind of all their purview is that tiny aspect. I think a co-executive is more somebody who is balancing out whatever the organization needs and isn't living with on a day-to-day.
Yeah. I like the term used, half a step away from the founder level, because in many cases we'll look to have a vested interest in that client, right? Either it's a company that we've helped found from scratch, or we've come in at an early stage. Either way, that to be able to really understand and feel and make sometimes independent decisions that then evolve to what you said earlier, that to a company that then needs additional resources that you're helping piece together with management, putting together that org chart. Look, the consultant model, generally in fractional CFO model, is to us something that's very valuable for the right situations. A lot of the ones that we get into as a firm, it's really critical that they need a vested partner that's there day to day, as you said, and really involving themselves, really arm in arm, as we say, with management on long-term strategic decisions.
Where I think I would really distinguish co-executive from fractional leadership, or in particular, kind of more established true consulting firms, right? Is much of that space is from a language perspective driven by you should.
Mm-hmm.
You should go and do this. You should bring in someone to do this. Whereas I think we will is more of the way we live our days every day of being, because we're part of the company, part of that vision. It's more we want to go do the work as much as we want to help you think through what the right strategic work to be done is.
I'm pretty sure that the problems that we see in energy, industrial, whatnot, energy transition, namely that you probably encounter some of the same general concerns in healthcare, IT, retail, whatnot, as it's starting out as an early stage company. But basically, the way I see it is that we want to be part of the team where there's an open door if you were talking to a consultant, and when the door closes and it's behind the scene or behind the curtain with management, that we're really understanding what are the concerns, what really is the vision, and then helping from the inside out make those decisions. So I think that for an energy company, industrial, it's capital intensive. So that means understanding where capital comes from, what form it comes from, how it's deployed, and those are just very challenging decisions for an early stage company. That without that partner that has a vested interest, it just again becomes very much a challenge.
I think there's a lot of truth in that. I think part of the kind of team building side of it to me is also bringing inside outside perspectives, right? So living inside the organization, having connectivity to it, especially having more than just you and I, having a broader team within the firm, having folks within our group that are connected to various organizations, have been at the start helping to build certain companies, have that perspective, know what's going on day to day, but aren't tasked with the management of that day to day, gives a unique perspective. And the example I would give was a conversation we were having just last week where, without names, right, company had a private equity firm invest with them in 2019, went through COVID and I should say suffered through COVID, had a couple of really challenging years since then. We're now in 2025. There's not a lot of trust between the sponsor and the entity. There's certainly no love between them. And we're at sort of an inflection point where the underlying business has really recovered and is poised for making the next leap, at the same point in time that there are some balance sheet inflection points that are driving an outcome. And where we were talking with this partner last week was operationally, strategically, we're at and around where we want to be. We can't try to beat this particular private equity firm and push them out and drive their loss. We need to focus on how do we get to the right balance sheet for our win, which is very different. Those two things do not have to be in conflict. Our win could also be a good outcome for them. Their outcome is sort of irrespective of what we're trying to do, and we need to focus on what our win is.
That's right. What's best for the business, right? And that's a challenge when it comes to capital, right? That the incentives, the motivations that the capital may bring, debt, equity, otherwise, may not be completely aligned with the client, and it's our job to kind of level set and speak the same language as much as we can.
Boy, tactically, what does the co-executive look like day to day? I would say there's very little day to day. Look, I think the very nature of the companies that we get involved with, and including those ones we've started, and including those ones we've come to a later stage, they're all at a period of rapid growth and trying to do a lot of things all at the same time. And so there's an inherent energy that comes with that. I'm trying to avoid the word chaos because I don't think it's chaotic, but at the same time, it can be a frenetic pace at times. And so I guess I would kind of characterize or throw to you our day-to-day is more trying to bring some organization to that day-to-day. And so certainly one day doesn't look like the next, but I think that's the goal, is always taking that energy and that pace and organizing it towards an outcome and towards a shared goal, as opposed to either living in it and embracing it, or alternatively trying to be in front of that and slow it down.
Yeah, I agree. And I like the idea of organizing and pointing towards the same goal, everyone pointing north. And I think it's something you've said before, that getting different constituents of the business to speak to each other on a regular basis, communication, which I know you hear a lot about, like your business needs to communicate well, inside, but like when it really comes down to it, in terms of executing, as you said, on daily tasks, on reporting, on maybe irregular things in terms of strategic initiatives, that making sure that operations and finance and senior management and those on the outside are all speaking the same language is key.
Well, to be specific, I think that organizing North Star for us, that way to always orient the business towards that shared goal, for us, I think starts and ends with a cash forecast, right? From my perspective, the best way for us to understand an organization, and then to your point, to bring all the other members of the organization together so that we're speaking the same language, is to orient off of where does cash sit each week into the future. So many of the businesses that we're involved with require a significant amount of capital, structured tranches of capital coming in at different times, orienting to when those are coming and what we need to accomplish to get there, and then alternatively ensuring that the successes that we're having, the growth that we're seeing, is translating into cash flow and cash return. To me, that type of forecasting tool is unavoidably necessary to orient everybody to the same shared vision.
Yeah, I agreed, and I think it's something that people will talk about. Cash flow is really important. It is the most important thing at the end of the day. Every business that you see, whatever discipline or industry, is really key. And getting there. And by the way, I would say most situations that we encounter, fully engaged or not, are all having some, I don't want to say struggle with cash, but you have to monitor cash on a regular basis. So you're absolutely right. Kind of day one, that's the first thing to do. You build out the treasury function, and then it kind of bleeds into the operational focus, because they're going to be the ones deploying the capital, and then can more easily make management decisions from that point on.
Well, if I can take it a step further, I think the orientation towards cash is something that we would not have come to appreciate had we not experienced significant downturns in kind of our previous traditional energy world,
That's
right?
Yep.
Of when you live in a business that has a commodity that can fall 60%, 80% in value, and you have to adapt to that's what drove, I don't think we ever looked at a cash flow forecast when we were, when we were at the top of the charts, right? It was kind of that, the other side of the coin, and when that shoe drops, that gives you that unifying perspective, and certainly something I think that, having lived through that, is very useful for all companies. Mm-hmm. I think the main focus and kind of the operational metrics that we're trying to achieve, that we're trying to help drive, is really, I think, trying to build a business that maintains and keeps its strategic vision, but is also a growing, thriving, profitable business that is working towards a conclusion. We've worked with some where I think there may be an initial public offering. We've worked with others where I think it's much more likely to kind of move and sell to a strategic. But we work with a lot of very vision and mission focused CEOs. And I think it's important that at all times we're helping to kind of translate that vision into how to translate that into an actual thriving and growing company. I think it's very easy to get caught up in what we're trying to accomplish over the next 5 years from a decarbonization, or from a recycling, or even from just growing and building scale, to refocus that back to how does that work for shareholders, for employees, for building the overall, the quote unquote, the company. I think is a necessary part of driving those operational outcomes in the near term.
I agree. And to kind of repeat that back, I like the way you kind of said that. It kind of dovetails back into the ultimate founders or constituents of the company. that none of these areas are kind of mutually exclusive, right? So if you say, oh, well, I've nailed it on, treasury function, yeah, it doesn't make sense if you're ignoring or to the detriment of, say, operations or long-term strategy, or if you're just head down and I've got current operations, humming along. What does it mean midterm, long term if you don't have that focus? So you need to have these multiple lenses at all times, and these areas are all interdependent. Certainly cash it's both a reactionary and proactive type, I would say, function where you're reacting to what's happened, but you're trying to be proactive in terms of capital deployment, long-term strategy. But it's the constant ebb and flow.
Well, I think if your organization is working really well, if everybody is fully aligned and connected, communicating at the highest levels, then maybe you can be doing two things at the same time. But when we're at our best globally, not just FICAP, but more broadly across companies, is when we're focused on one near-term deliverable, focused on one core function for each person, and we're solely focused on executing and accomplishing that near-term task. And so I think a lot of our kind of co-executive role is taking these broader visions and opportunities and trying to translate that into this week we need to accomplish X. We're trying to work through in one situation, trying to work through kind of a messy internal dynamic. In order to do that successfully, this week we have to deliver and get the books closed so that we're all working with the right financial information. The next week we have to understand who exactly is in support of the current team's plan. The next week, the following, right? These types of, let's break down this broader vision into specific tasks that we can orient, then allows the organization to kind of have one thing at a time, maybe two things at a time that actually get accomplished, as opposed to endless conversations and meetings of talking about work but not getting things done.
That's right. And we've been talking about, I think, a lot where, in terms of stages of a company where there's maybe an existing operation or it's, I don't want to say well on its way, but it's, past the very first dollar of revenue. And as you've alluded to before, Jeff, and rightly so, that there's these functional areas and these very near-term, sometimes weekly milestones that need to be met. In terms of the capital needs, because let's face it, everybody needs capital in different ways. They usually don't know how much they need and what form and when to deploy it and how to deploy it, and then how to measure it afterwards. So we talked about this. I think one of our, I think, kind of special sauce things we have at FICAP is to be able to determine from a capital perspective, how do I attract the next round of capital beyond the capital I'm bringing in today in terms of milestones and what's realistic. Sure, I know I want to create the world's greatest widget and it's going to be the greatest thing since sliced bread, but to get there are multiple milestones and stages, and to make sure that there's a linear fashion there. So I would say, at least in the earlier stages, that making sure that there's real hand-holding and guidance in terms of capital deployment.
Which the biggest thing is just what are you actually going to spend the money on? What do you need it for specifically? I've heard way too many. We need $10 million for this kind of list of hopeful aspirations, as opposed to
yes,
we need 2.75 for this engineering group. We need another $1 million to stand up this commercial relationship. That's an unfortunate part of kind of driving the bus is orienting around what are difficult to estimate specific amounts.
Well, and you mentioned before about what life looks like when you're kind of past that stage, when the business is somewhat up and running, somewhat self-sufficient. And so we try to set that as, if you would agree, like a goal, almost like a vision for that client, that like you're right here, you're not going to get to there tomorrow. And like you said, that it has to be somewhat specific, and that not just specific, but the results of each of those tranches and pieces of that capital need have to be very specific in terms of their return or the value. And sometimes they're not going to return cash flow. Sometimes it's just going to get me to the next stage where I can then raise the next level of money or deploy it differently. But setting that vision and making sure that everyone's got the same 20/20 lens is is really important.
You mean you have to give capital a return? It's not just
That's right.
It's
That's
not just
right.
money for projects.
That's right. For wherever it comes
hope?
from.
No,
That's exactly
yeah.
right. Yeah.
That's novel.
But as you know, everyone wants to give us money, right?
Yeah.
So it's maybe not always the case.
I mean, in terms of time to getting to the next stage of capital, I think we're all at our best when we're event driven as opposed to kind of thesis driven, right? So, to me, there's a number of organizations we're a part of that the goal is to get to quote unquote FID, right? Final investment decision, where kind of everything is teed up. Well, in order to do that, we have a matrix of a series of 10 items that all need to be checked off to get to that point in time. Getting to FID, unfortunately, is often going to require more than just one round of capital. And so I think it's kind of orienting that list to what do we need to do to get to the second round and the third round to get to FID. How do we, kind of demonstrate the viability and efficacy of this project to get to those stages? From my perspective, I think when we just try to be too focused on, broad eventual outcomes, you lose that interim period of being driven by these are the next milestones that we have to accomplish. And I also think when we're not event driven and event focused, we spend too much time thinking theoretically about what potential outcomes could come along down the road, how things may manifest, and what decisions am I going to be faced with in the future. Mm-hmm. If we're focused on making decisions through and based on events, then we're living in the world as it exists and not just trying to kind of plan for some eventual outcome that may be hard to see and can lead to a lot of inefficiency and wasted conversation on things that never materialize.
Definitely. And is it safe to say the best laid plans of mice and men, so on, right? And being adaptable to when plans don't go the way you planned. And I have one stage of capital and maybe another, and then I want to get to FID or expect to get to FID, and it doesn't happen. Just whether it's something needs to be redesigned, R&D doesn't work, get to go back to the quote unquote lab. These things happen. They probably happen more often than not, right? So being adaptable and being focused on making sure what are the key milestones within, there's smaller milestones in between, and making sure that you're, keenly focused that, as you said before, that, okay, where I'm going, does it pay to kind of reinvent the wheel, or maybe I'm not thinking of the right approach in terms of maybe sidestepping a bit, bringing in another partner, and not completely going off the rails.
Yeah, and we work with multiple organizations that at the heart of the strategy is to grow through acquisition. Mm-hmm. I think that's the perfect example of trying not to be overly planning. We don't know what opportunities are going to come along. We don't know what size they're going to be. We don't know how, what overlap they're going to have with our underlying criteria that we're focused on. And so we have to live within the world that brings those opportunities to market and decide whether they're the right ones for us or sometimes the best deal we do is the one we don't do.
Absolutely.
But
yeah,
I think you have to have that flexibility inside of that, and trying to, put that down in a forecast and plan out the next 18 months of we're going to do this transaction and this transaction is just a fool's errand.
Yeah, exactly. And making sure that, knowing early if something's not going to work and making that decision so you're not deploying capital into a black hole is also really important. And we see that resistance sometimes where I know this is going to work, it has to work, and you may need to rethink it. When we work with capital partners, namely private equity and sometimes family offices, because that's predominantly who we're working with in terms of constituents on the equity side, maybe private credit. Look, again, it goes back to, I think, one of the first couple of things we said, right? And I think you said it was that it just comes from the years of kind of blood, sweat, and tears, trench warfare that we had to go through, and learning a lot from things that didn't go right. And that in terms of being kind of boots on the ground and playing that, I don't want to say intermediate role, because we're partners with senior management and also partners with a capital partner in terms of, hey, this is going well, but this isn't going right. It needs everyone's attention. And that, again, having lived from, as you and I say, inside the fence for many years, that we're not just saying that. I mean, that really does mean something where those on the capital side may not have lived that experience, but that's what we bring to the equation. That's what we bring to the partnership.
I agree, but I do think in many cases there's a lot of talent in high net worth individuals. There's a lot of talent in private equity teams and sponsors that I think, given capacity, could be very impactful to those organizations. I think to me it's about allocation of time, right? And where I think we're most impactful is if you are the firm, you need to be focused on, three things all at the same time, right? You need to be focused on raising new capital. You need to be focused on deploying the capital that you've raised. And then you need to be focused on making sure that the deployments you've already made are being successfully managed and turning into and generating the results that you expected. And so I think where we slot in best is in situations where, we want to, as a sponsor, focus on those first two buckets, but need real experience in helping to get the right outcome out of the deployments we've already made.
Yeah.
And it's easy to get overstretched. We obviously, now I will say, we live in times where running businesses can be chaotic. We've seen tariffs, we've seen pandemics, we've seen a lot of things that have disrupted expectation. And so having that real leadership of doers that have lived, as you said, behind the desk is extremely valuable.
Yeah, I agree. And trying to get, maybe we're somewhat unique in our value proposition, right? Because we're not bankers, we're not consultants, we're not fractional CFOs. We kind of touch on the Venn diagram of a lot of those things, but really kind of the essence, as you said, of the experience. And trying sometimes to convey that is a little challenging to capital because they may not have seen this model that, you guys are really going to, like, as you said before, make those suggestions and execute and make sure that the capital is deployed properly and this and truly a part of the business. So to me, that's, you're solving a problem, as you said, allocation of time. I totally agree in that capital typically doesn't expect to be spending more of their time, kind of rolling up their sleeves and trying to, get it under the sink, so to speak, and fixing the leak. Whereas we will, and then we back ourselves out also at a very high level and help with those strategic decisions. So I just think it's a model that sometimes has to be shown and lived through for someone to really understand it.
Yeah, a situation where we saw and kind of headed off real disaster. If you remember, we were working with a group of it was a refueling model, right? Essentially, we would drive around with trucks full of gasoline and fill fleets on site. So rather than the entire fleet having to go to Wawa in the morning and risk all of those fender benders, lose an hour of moving people in and out of the parking lot, filling up the tanks, grabbing coffee, what have you, this firm would drive around to the parking lots at night and fill up all of the vehicles. And it was kind of a team of really scrappy, energetic, dedicated individuals, a little bit earlier in career, a little bit earlier in life. And their focus was just trying to get every contract they could, be at every fueling yard that they could be, just gain scale at all cost. And it was, frankly, it was bankrupting them, right? They had borrowed a lot of money to buy the vehicles. They were not paying attention to what the actual margin was, not just the cost of fuel versus the cost that they were selling fuel, but how long would it take our driver to get out there? How many trucks are we doing on site, right? All of those elements of what truly makes a customer profitable or not. And I think we found, I forget if it was 25 or 33% of their revenue was producing a loss.
That's right.
And they were running out of cash very quickly. And so I think we were able to kind of build a assessment tool for, is this a good job to take? Is this the right customer to take? And also to help, sometimes the best thing we can do is fire customers.
Yeah, that's right. Well, and I like to think that we learned as much, if not more, from that experience than they hopefully did. That it was, as we dug into it, I clearly remember everything you said about the bottom 25 or 30%. And actually, it was a very kind of early on situation for our firm, and where one of the earlier times where I felt that, adding value, that's something that we found and discovered that, could have been worse, and we tried to stem it. We liked the business, we liked the team. We thought it was really ingenious the way that the value proposition, but definitely there were some things to address for sure.
It was fun to produce value.
Yeah.
Growing up on the accounting side and then public company CFO, right? Those are parachute jobs, right? That nobody really thinks about until it doesn't work.
That's
so,
right. Or maybe without a parachute.
It was nice to do something proactive for a change.
Replacing chaos with structure. Again, we'll try to avoid the chaos word, but I think it's just a natural element maybe of one's business where if you're in a business that's very capital intensive and industrial, there's just, I don't say more things that could go wrong versus like something that's virtual and tech related. But that's just my experience, at least. Maybe it's the same with yours. I think that one of our kind of relationships where, again, I think you brought this up earlier in terms of just bringing structure, that there's a lot of maybe good things and maybe positive things happening somewhat independently, but they're somewhat siloed, and that there's you use this kind of term as 1 + 1 = 3, but in this case I think where there's some synergies that needed to be made, and it's very kind of a oil and gas related industrial type business that again, in terms of, are we approaching the right clients? Are we retaining the right clients? Are we going after the right revenue? And then how do we optimize that? I think that all the pieces were kind of floating there, and then just kind of bring them all together, kind of cattle herding them, and making sure that management all agreed that we're going to focus on these specific areas and not these for right now. And then things start to happen a little bit more productively naturally.
Focus on the jobs that generate revenue, not just cost.
Yeah, that's exactly right. Big key. No, I agree. And it's, I think companies like that are industrially heavy and capital intensive, naturally may be symptomatic of that, right? They have customers that just aren't maybe been a long time customer, and it's just a lot of time, effort, and capital, and it's not really returning anything.
Well, I think we see that a lot especially on kind of the greener businesses and those that are really trying to, kind of first and foremost focus on a environmental solution, as opposed to, kind of focusing on driving an operational outcome. And I think we're typically, very aligned thematically of where we want to be focused. I think our perspective is, trying to kind of build the company so that it's able to accomplish those goals.
That's right.
As opposed to just kind of starting with that mission, and kind of hoping that the money follows.
Yeah. And would you agree that, in some cases,
Probably
maybe
not.
early on, you would agree, that you may need to take a loss, but you may need to thin down margins to achieve something, or a proof of concept, or, whether it's, I guess it depends on the business, but in some cases you may say, like, I'm not saying, hey, take the L here, but maybe focus effort here because this is going to lead you, because of that relationship, to something much bigger. Or more
Yeah, I think I would focus it more around risk, right?
Yep.
I'll take certainty and a thinner margin over, hey, we can play this market and really drive a result. But we, that may invert as well. I think the appeal of a co-executive to the private equity sponsor, to me, is more around, a couple of things. One is just from a practical standpoint, it's kind of having a partner where you can engage and stay close to multiple portfolio companies with one phone call, right? That this is from a time perspective. There's a simplicity that I also think there's a much. It's a lot easier to charge kind of a group like ours to a number of portfolio companies than it is to take the team at the sponsor level and allocate
Agreed.
them down, right? There's some rules around kind of fund structure that make that a little bit harder.
Yeah.
Give us a little bit more ability to be direct in that sense.
Yeah.
But then I think more functionally inside of the portfolio company, it's, again, as we've been talking, making sure that the company is focused on, driving the strategic outcome that we've invested around, as opposed to building fiefdoms or, gaining a market share at all costs, right? Some of those elements where we can get distracted from what the original capital was invested to do. I mean, I think your point earlier about capital needing to come in to generate a return. The kind of flip side of that is after capital has come in, making sure that we're focused on those aims and that original business plan, with all the caveats around flexibility and kind of we need to be adaptable. But in that vein, we agreed on a purview and a set of assumptions, and we're in the process of trying to execute on those before we're just going to kind of tear the script up and do something else.
Yeah, I agree. And I think coming in at the company level is really key, right? So, and maybe that's something that's somewhat of a different model than a lot of the capital sponsors we would talk to have seen. But it's the only one we know, and it's the only way we know how to really execute is to allocate that time specifically, kind of boots on the ground. We are maybe the first phone call in the morning and the last phone call at the end of the day with our founder sponsors and partners, and that's just because we are so much a part of the business and not an outsider, and that making sure that they know what we're doing, we know what they're doing, and that there's a constant reminding of that. Execution, daily basis, weekly basis, monthly basis. But really, we are, like I said, arm in arm. So I think that living that is the only way that it's not like we'll check in every Tuesday. It's not like a regular, we'll have those meetings. Sometimes we're hosting the management meetings and running them themselves. I mean, that's just the way.
But from a cost perspective, I mean, I think the value that we can offer is having the depth of resource at the firm, not just, one of us who could maybe step in and serve as CFO, but having 8+ people who are involved and the right work is being done at the right level.
That's right.
Inherently makes it much more economic than having to build a team, right? Typically, there's not many CFOs that you want to bring in and have them do everything within the finance suite, all of the kind of treasury work and AP work and HR work and payroll work.
Or oversee it, right?
Right. Typically, they're going to want to bring in a team, and now you're hiring not just one person, but 6. We can kind of give that scale in a customized way to size to the organization, so that you're getting the experience of somebody who's spent 3 years in banking and has all of that talent and skill, rather than having to go out and hire that person to serve as head of corporate development or FP&A.
And I know you see this as named CFO for several of our clients, that when there's a decision to engage from either the capital partner and or the client partner, that there's so many other things that one individual either can do or things you haven't thought of that they need to do. So we get very much involved with if there's an audit, tax preparation, whatnot, whether we're not necessarily doing it ourselves, but overseeing that and making sure all the trains are running on time. And there's so many aspects to that, I'll call it quote unquote financial function, that bleed into other areas that we think that in a good way, that's just value, because that's the life we've lived, and we know to kind of how to fill in those cracks where, if it's too late and they've brought someone in and they're not addressing it properly, then there's a lot of time and effort and capital cost to try to correct it.
I mean, I think the biggest way to de-risk capital investment is I think on the front end, making sure that capital is fully aware of where we are, and that we've done as much without money as possible. We've advanced the situation as much as possible so that the only limiting factor at this point is money coming in to kind of, the everything is set up, the dominoes are ready to fall. We just need that capital, that investment to come in and tip the first one over. I think on the backside of after that investment has been made, de-risking that first and foremost is again driving execution on what we set the business plan to be at the beginning. What milestones do we need to achieve to get into revenue, to close an acquisition, to gain scale, right? All of those elements that we are had an investment thesis around. What is the next day spent doing to drive that outcome.
That's
It
right.
can't be
That's right.
that next day can't be this kind of sense of relief and the money's sitting in the bank and we're good. That urgency of the way we've built the company up until that point needs to be even more present the day after in driving the outcome that we agreed to at the front end.
Yeah, I couldn't say it any better. I think it's this, I like that day by day, there's this constant reverberation of capital and execution. And I think if there's I don't want to say it's a misconception of what our model is, but really proving what it is that, it's exactly like you said, is that there's a constant monitoring, living execution. And I think that's really what it is. When you're executing day to day and you're with management side by side and you are a part of the business, you are doing that exactly. You are making sure that the capital that's coming in is coming in properly. It's coming in from the right sources and then being deployed properly. And like you said, that those milestones are constantly being evaluated, reevaluated, met onto the next one. And that's not a monthly, yearly thing. That is, like you said, that is a daily process. And and that it only comes with being there day to day.
Well, to give a specific example, so not too distant past, working with an organization that brought in kind of pretty expensive short-term debt to stabilize the situation, put a little cash on the balance sheet, kind of extend the runway, if you will. Mm-hmm. And the runway needed to be extended to identify the right acquisition that we could really raise capital around and grow out of. And I think that the deal the team first got excited about on the surface initially seemed like exactly what we were looking for, something that was of size enough to go and have a real investment thesis to raise real capital and kind of right-size the balance sheet holistically instead of in an emergency or short-term way. Mm-hmm. And I think as we worked through the process, got to know the target a little bit better, there were pieces that just kind of kept disappearing. So it wasn't producing cash flow out of the gate. That's makes it tougher to raise money around. It was in a different area that would require a lot of organizational focus away from existing and base operations to kind of new efforts. That has a real risk to it. The assets coming over were going to be difficult to kind of build the right balance sheet around out of the gate. So, as we continue to push, as we often do, I think had a, kind of stop short. What are we trying to do here with this transaction conversation? What are we trying to do here? We started by saying we were trying to have a holistic fix to the situation. This is not that. And so we're now at a square peg in a round hole. We need to pivot back to the things that are going right in the organization, growing from the successes we're having in our base business, as opposed to trying to shoehorn something in that's not going to meet that initial goal.
I think if you're trying to determine whether our model fits your situation, that I think you really need to understand and kind of work. I think work backwards, and if you get stuck working backwards to where you are today and can't work in every step backwards in terms of what my ultimate goal is, almost from like a reverse, from a funnel, and then make it smaller and smaller to where I am today, and you stumble on kind of doing reverse milestones, almost like putting your car in reverse on the highway and knowing from where you're starting from, then I think that, and I think that happens in most cases, then I think that you should evaluate, what do I need to get there? And I think this kind of goes back to our original point, like you need that early leadership, senior leadership, if you can kind of visualize that to kind of establish those milestones, and that it's linear, right? That we see it kind of scattershot, and then a lot of companies that are, see, kind of a glowing, shiny object, but don't know how to get there. There's no path. That's not linear. They don't know what the capital steps are to get there, how much it costs, and how much time, more importantly.
I think it's also for CEOs, founders, for the capital behind them, it's about what are you good at? What got you to being in this position, and do you have the capacity and the time to be focused on that? Mm-hmm. And I think a lot of the times where we're coming in, it's to take away the things that are keeping the core leadership team, the heart of the business, the heart and soul of the business from the start, take the things that are keeping them from doing what they're good at and what they got them to this position, take those off of the to-do list and make sure that execution is happening in the background and not a distraction, and allowing the people who built the company from the start to do the things that they're great at. The best way I could describe what we can offer to a CEO, to a founder, is really the ability to have a second arm, a second right arm that is driving the business, executing your vision, keeping your strategic focus as part of your daily exercise, and making sure that vision is being turned into reality at not just every day, but each hour of every day.